Hi, welcome to EQD Research Global Insights for Friday, April 23rd. Today, we're going to take a look at earnings next week. A bunch of the NASDAQ 100 components are reporting earnings next week. We're going to look at the history of price reactions for those stocks that are going to have earnings next week. And then we'll take a look at NASDAQ 100 volatility, not really moving up too much into next week's slew of earnings announcements, but also I came across an NDX day trade, an option day trade. And I know it's a day trade because the options expire on the close today. And then finally, checking in on the S&P 500 and VIX, somebody is looking for a spike in volatility between now and June VIX expiration. But first, we continue to pick up subscribers, but we want more. You can help out by hitting that like button. If you haven't subscribed, make sure you subscribe. And then also hit the little bell. That'll give you a notification every time one of these videos goes live. So starting out with earnings announcements. A good portion of the NASDAQ 100 reports earnings next week, kicking off with Tesla Monday after the close. Now, this past week, we did have a high profile. It's a little less than 2% of the NASDAQ 100, but Netflix is a pretty high profile stock. They reported disappointing earnings, and I say that it actually was disappointing subscriber growth. But either way, the stock lost 7.99%. Now, that appears to be a big drop, and it's a bigger drop than normal off of earnings. The average move was about 6.2%, but the options were pricing in more like about a 7% move or so. The at-the-money straddle was priced at 36.05 going into the earnings announcement. The next day, you could have sold it for a little over 41 points. So you could have made about 5 points by going long volatility with Netflix reporting their earnings. You get an 8% move and it's only a 5% profit. Not sure if the risk reward really justifies putting on that straddle. Of course, hindsight is 2020. Now, next week's earnings in the NASDAQ, 46% of the NASDAQ's market capitalization is on the table that I'm showing you right now. And this table is based on the last 12 quarters of data and represents one-day price moves the day after earnings announcement. So we got the biggest gain over the last 12 quarters, the biggest drop over the last 12 quarters. That average move is an absolute value number, but it's the absolute value of a move higher or lower. A lot of volatility traders like to look at that, and that would have related to the straddle that I just talked about with respect to Netflix. Now, as I mentioned, Tesla goes first Monday on the close. The name I'm keeping an eye on is Qualcomm, which reports Wednesday after the close. Note that Qualcomm's move was down 8.83% last quarter, which is also the biggest drop in the stock in reaction to earnings in the last 3 years. I have found that traders have a short memory, and maybe the Qualcomm options will be overpriced going into earnings. We'll definitely check on that, probably talk about that a little bit on our Tuesday program next week. So typically, as I mentioned, NDX volatility is elevated going into earnings season, but we're not really seeing that right now, even after that Netflix outlier move earlier this week. This morning, the NDX is up 88 points to 13,850, and NASDAQ Volatility Index, VolQ, down 92 cents to 2085. Now, one short-term trader thinks we're going to have a relatively quiet day, as 10 minutes into the trading day, there was a bullish to neutral bull put spread that hit the tape. Specifically, the spread trade sold the NDX April 23rd. Yes, that's today. 13,720 put for 1333. They purchased the 13,700 puts for 1068. And this trade went off a little bit earlier in the day with the NDX at 13,820. As long as we finish the day over 13,720, the profit equals that 265 credit taken in. Worst case is a drop below 13,700 that takes us to a loss of $17.35. So I know at least one trader, regardless of how quiet it is today, going to be keeping an eye on the NASDAQ level. I'm going to keep an eye on it as well. I'm probably going to follow up with a blog on Saturday morning, just saying whether or not it appears they held it through expiration. So definitely going to have a follow-up there. And then finally, checking in on the S&P 500 and VIX. The S&P 500 is up around 20 points to 4156. VIX is down 75 cents to 1796 as I stand here. May's the front month now, and it's down around 40 cents to 2075, just under a 3-point premium relative to spot. Farther on the curve, the futures are all down between 10 and 30 cents with a parallel shift lower, kind of a quiet day in trading so far today. Despite the somewhat steep curve, and I say steep curve, the June future is at 2250 with the underlying at 1796. But with the future at 2250, somebody came in and bought 6,250 of the June 24 calls at 297, and they sold the same number of 40 calls for $1.05, netting a cost of $1.92 per spread. Now, this trade does very well with VIX over 40 at June expiration, but any volatility spike would probably result in at least part, if not all, of the spread being monetized. Usually when you put on a trade with the expectation that we're going to get a spike up in volatility, there's a point where you're going to go ahead and take that thing off and take profits on it. And then one final note, we did get a reverse split in VXX today. First time that's happened in some time. That just means adjustments to all the options that were outstanding. On my screen, those options have a ticker of VXX and the number 1 now. I'm just telling you, be careful if you're putting on a new VXX position, as I actually do every Friday and systematically. I'll be making sure that I am trading the correct options, the ones that represent 100 shares, but just a little public service announcement around that. So thanks for joining me for EQD Research Global Insights for April 23rd. If you made it this far, the rule is you have to hit that like button. Make sure you subscribe as well. Feel free to put some comments in the space below. And as always, shoot me an email if you've got any suggestions, comments, questions, etc. Rhodes@eqderivatives.com.